Hello guys, how are you? Hope you all are fine and hope the yesterday's session must have gone good for you people. So first of all, let's quickly go through the transfer pricing chapter so that we can start the today's plan. Now transfer pricing, we had a discussion yesterday. The transfer pricing basically is revenue for the supplying division and cost for the receiving division. Uh, we had a discussion about the transfer price rule number 1, and that was general rule. So the dear management accountants, the first was general rule, and yesterday we had a very in-depth discussion about the general rule. And I told you, when the word profit maximization or optimum profit is used in the question, then this is an indication that you have to use the general rule. Okay? And for general rule application, I told you 3 things, and that was seller's perspective first, buyer's perspective second, and third was the group's perspective. So when you think for the seller's perspective, so you need to think of the minimum transfer price, and that minimum transfer price is a one that seller will sell but will not want to, because that will not give that division any kind of profit. Then we have to think of the buyer's perspective, what buyer will take the decision considering the offer of the seller. And in that particular situation, we had a discussion that maximum what the buyer will be willing to pay, maximum. Okay. And then the group perspective, which was basically a one in which we have had to identify the range of those number of units that will be transferred within the division. So the main thing was to find out how many units will be transferred within the division and at what price. So we didn't have to tell any price. Yes, we had to quote the range of that. Okay. So this was the general rule. Now there were lots of questions coming after the session that what about the other transfer prices? So I told you the applicability of the general rule, and you need to figure out that in a question when you are supposed to use the general rule, because it's not every time that you will be applying the general rule. And the condition of that is word profit maximization. Okay, I hope you must have read that document of the answer that I gave you yesterday, and that must have clarified lots of issues. Now let's come to practical transfer prices. Now this was the theoretical transfer price. Now practically, what transfer prices are actually used in the market? What type of transfer prices are actually being used in the market will come in practical transfer price area. So practically, market price act as a best transfer price, because when the transfer price is on the basis of market rates, so nobody will have any issue. Neither the seller will have any objection because it's the market price, and neither the buyer will have any issue because it's the market price. So when the transfer price is on the basis of market price, so that acts as a realistic transfer price, because seller knows if I am not selling internally, I can sell the same thing at the same price outside. Let's suppose $100 is the market price. The buyer knows if I'm not buying from internal market, I can buy from external market for $100. So the market price, my dear friends, acts as a realistic transfer price practically. Okay. Now, market price is the best option in practical transfer price, and then comes another one, that is adjusted market price. Now, what is adjusted market price? Yesterday we had a discussion about that as well in that particular mock company question. That if you remember, there was a saving of $30 in that particular question, saving of $30. Now that saving of $30 is basically a saving that will be achieved when both the divisions do business with each other. So guys, for example, if there is a product, and that product, for example, product X, now that product X, for example, the market price of product X is, let's suppose $100. So if the selling division sells product X outside, so it will be selling that product at $100. But if the same product is transferred within the division, internally in the organization, then there will be some internal saving. And that internal saving, let's suppose, is $30. And what kind of saving is this? Now, one could think that this saving will be in form of, for example, bad debts, because there will be no bad debts when the products are transferred internally. Plus, there will be saving in administration cost. Plus, there will be saving in distribution cost. So these are the savings that can be achieved when the companies are doing business with each other. Okay. So if I deduct the saving, so the price will be $70, and this $70 price will be called as adjusted market price, because if you are transferring internally, so there will be a saving of $30, and this saving of $30 will reduce the selling price and will give advantage to the internal division, will give advantage to the internal division, will make internal transfer more attractive because of the internal saving. So this price is known as adjusted market price. Adjusted market price. Okay. So market price is a one that acts as a fair price, but yes, when there are internal savings, so it's then better to go for adjusted market price, because the internal saving benefit, of course, should be given to the internal division. Okay. And that was the case yesterday. If you remember, in Mob company, there were internal savings of $30 if we were transferring internally. Okay. So this is adjusted market price. Now, if I talk about these two, it's whether market price or adjusted market price. When these two are not valid, when market price or adjusted market price are not valid, now just write it down, keep a pen in your hand and some paper or a notebook and write it down. Circumstances when market price is not usable. Now there are circumstances where market price does not act as a useful transfer price. So what is the reason one? Just write it down. Reason one is, are you all listening me? A quick yes from everyone, so that I will ensure that everyone is attentive. Are guys with me? Okay. Now, when market price or adjusted market price is not a useful option, so I'm telling you the circumstances. The first circumstances is when the selling division is in monopoly. When the selling division is in monopoly. Okay? Number two, when published prices are fictitious. When published prices are fictitious. Number three, when there is no market available, when there is no market available for the intermediate product. For the intermediate product. So there are three reasons that I told you, three circumstances. The first is that supplying or selling division is in monopoly. Now what it means? If the seller is in monopoly, you cannot gauge a correct market price because there is just one seller and there are so many buyers. So seller can dictate its own prices, and in that case market price will not exist, or I should say a realistic market price will not exist. A comparative market price will not exist. Okay. The second point I told you was that when the published prices are fictitious. Now, what fictitious means? That any price which is being published in the market, there is room for negotiation. There are a lot of markets, especially in our part of the world, that people, the seller and the buyer both knows that this price is a negotiable price. The seller, when it comes to the buyer, knows it that I will try to get a discount. This price is a higher price. And buyer also knows, on the other hand, that seller will never buy on this price and will always negotiate. So the published prices are fictitious when are not competitive. In that case, you cannot rely on market price because there is margin of negotiation. Okay. Third point was when there is no market available for the intermediate product. For example, division supplying, selling division is making a unique product, especially for the buying division. So selling division is making a unique product for the buying division, and that is a unique product which does not have any market, which does not have any external market. In that case as well, there will be no external competitive price being available when there is no external market available for the intermediate product. Got it? So guys, when there are three of these issues that I mentioned here, in that case market price or adjusted market price will not be a reliable source. Got it? Now I'm repeating again adjusted market price because few people asked me to do so. Adjusted market price means a price in which is basically a market price, but from that market price we deduct the internal savings, that internal cost savings that will result if the business is being done internally. And the example that I gave was, if the external market price is 100 and if you transfer within the division, there will be a $30 saving because of the distribution, bad debt or administration. So if we deduct these savings, so the price that we'll get will be adjusted market price of $70. This is because of the internal savings that will result because of the internal transfers. So this is adjusted market price. Okay. Now coming back to my point, that when market prices are not useful, when market prices are considered as not a reliable source of transfer price, then we are left with the last option, and that is cost-based transfer price. So my dear friends, cost-based transfer price is another option that we have. On the basis of that, we can set our transfer prices. And this is used when the market price or adjusted market price is not a useful option. But remember rule of thumb. Remember this rule of thumb. And the rule of thumb is that whenever you are going towards cost-based transfer price, it should always be standard cost. It should always base on the basis of standard cost. So whenever we are going for cost-based transfer price, we have to use the standard cost only, not actual cost. Okay, standard cost only, not actual cost. So remember, this is a very important rule, that it should be based on standard cost only. Okay, now it's time for some participation. So are you all ready? Okay. Now if I make cost-based transfer price the basis for the transfer price, so the first option I have is marginal cost. The second option I have is the total cost. The third option I have is the total cost plus. Okay. Now quickly I need your suggestions so that we could have a good discussion on it. Marginal cost. So my dear friends, if the transfer price is set at marginal cost, now what marginal cost of which division? Obviously selling division. That is, if seller is selling the buyer at marginal cost, variable cost. So quickly just type here, do you think that seller will earn any sort of contribution or in fact profit, or seller will have a loss? No profit, no contribution. Okay, so if I'm setting the transfer price on the basis of marginal cost, so I think, and you also think, that seller will not have any sort of profit. So this means it will not be a workable option until and unless the head office, the group, pressures the selling division. But if you talk about the willingness of the seller, so it will not be, because seller will never want to transfer anything at their marginal cost because it will not result in any sort of profit. Now if you recall, yesterday I told you the same thing when we were learning general rule. And in general rule, if you remember, what we learned, that if there is spare capacity, there will be no opportunity cost, which means the transfer price will be equal to marginal cost. But dear management accountants, if you recall, I mentioned there that it will not just be marginal cost. The seller will try to sell it for minimum marginal cost or more. Can you recall that figure of 740? So what I told you, it was 740 or more, because seller will want to earn profit. So guys, at marginal cost, the seller will not be willing to sell until and unless the pressure comes from the head office. Okay. So what then the other option the company will have? So the other option the company has is of total cost. Now total cost still seems a better option than marginal cost. I'm sure you will agree, because total cost is ensuring what? Come on, can you tell me? On the basis of total cost, the company will be able to cover its fixed costs along with variable. Quick answers please. Company will be able to cover its fixed cost along with variable. Yes, it will be able to cover its fixed cost along with variable. So still it seems to be a better option. I'm not saying this is the best option, but yes, it seems to be a better option compared to variable cost or a marginal cost. But yes, again, seller will have no profit. Seller will earn nothing. So in long run, seller again will want some profit, will not to transfer at total cost. So guys, the best option we are left with is total cost plus then. And what total cost plus is? Total cost plus is an option in which the seller will keep some markup on its total cost. So this markup will give profit to the seller, and this makes total cost plus a better option compared to marginal cost and compared to full cost options. So yes, this seems to be the more appropriate of all, total cost plus, because my dear friends, this is just because it includes the profit element, and yes, that profit element will be negotiated between the two divisions, but it seems to be a better and good option. So these were the remaining transfer prices that we had discussed in transfer pricing case, and the best seems to be total cost plus. Yeah, Daniel, this is what I've covered right now. Total cost plus means what? It means a profit over the cost. Okay. Done, guys. Okay, Imran. Basically, internal savings are, yes, administration cost savings and distribution savings that one could get by transferring within the company. Okay. So, guys, these are the cost-based transfer price options. I'm sure this is clear to you, but make sure you learn this, that this should always be on the basis of standard cost only. Done? Arun, I've already discussed adjusted market price 2 times. I'm again discussing. Adjusted market price is a simple thing that when the company is transferring the goods within the division, so it may get internal savings in form of bad debts, administration savings. So when the company, the seller is getting the savings by transferring internally, so it can go for adjusted market price in that case. And what is that? External selling price. From external selling price, the seller can deduct the savings that the seller will get by transferring internally. So once the seller will deduct it, the remaining figure would be set as adjusted market price, which I mentioned here in the working. 100 minus 30. 100 minus 30 is 70. Okay, and I gave the example of saving in terms of bad debts, distribution costs, things like these will be saved, because you do not have to distribute if you are transferring within the company. So distribution costs will be saved. Administration costs in terms of less documentations will be incurred. Okay. So guys, this all was about transfer pricing options. Now, the last thing that I want to mention here is that you know when to use general rule. When the question indicates by a word something like profit maximization, optimum profit of the groups, like this, you need to figure out that. But when market price or cost based will be used, so don't worry about it. Whenever the examiner wants you to use market price or cost based options, any of the cost based options, the question will state it very clearly. The question will not give you any indications but the question will state it very clearly that you have to use at market price or you have to use cost-based transfer prices. Okay, so in that you do not need any indications, but for general rule there is indication that I told you. Okay, the last thing before we move on to the next area is objectives of transfer pricing system. A good appropriate transfer price will ensure goal congruence. Now, what is goal congruence? Goal congruence means, listen very carefully so that there is no confusion. Goal congruence means that the individual departmental managers are working in line with the group's policy. So goal congruence means working in line with the group's policy, and there is no conflict, there is no dysfunctional behavior. So the individual managers are working in line with the group policy is known as goal congruence. So transfer pricing system objective is to ensure goal congruence. And how it will be done? If every manager will try their best and work ethically on a fair basis and improve their division's profits so that will ensure the group profits are maximized, and that in turn will ensure goal congruence. Okay. The second purpose of the transfer price is to ensure a fair performance measurement. That is, if there will be a fair transfer price, so it will be easy to gauge the performance of both the seller and the buyer. But here, one thing is important, that the price should be a fair transfer price, not something on which there is a dispute. So if the transfer price is fair, then yes, there will be a fair performance assessment of both the seller and the buyer. The third and the last purpose of transfer price is to give autonomy. Autonomy means to give the power, decision-making power, to set the transfer price to the divisions. Autonomy means that individual managers, departmental managers have that luxury, have that ability, have that access, have that power to set their own transfer prices. So they have that luxury to set their own transfer prices, and this is autonomy. Because if you do not give the manager the authority to set their own prices, then that will result in demotivation. That will result in dysfunctional behavior. If head office is pressurizing the manager to keep a transfer price which is deteriorating or affecting their own division results, then I'm afraid the manager will not be motivated. In fact, will get demotivated and will not try to improve the performance. So this is the third objective, that there should be autonomy so that managers can set their own transfer prices. Okay, my friends. So the last thing, as I'm moving on towards the next area, is if you are asked to use market price or cost base, that will be clearly mentioned in the paper. But if nothing is mentioned as regard general rule, so try to find out the indication, and that was profit maximization. And I've tried my best to make these peanuts for you when it is profit maximization, and when you have to use general rule, you need to remember three things. What were those three things? The seller's perspective, the buyer's perspective, and the group's perspective. When you are thinking from seller, think of the minimum that seller will offer. If you are thinking from the buyer, think of the maximum the buyer can pay. Minimum the seller can sell, maximum the buyer can pay. And then the group perspective, in which you will identify a range. Okay, and the last question was the best example of that. So I hope this would have worked good for you, good for your cause, good for your examination. Now let's move on to another area, of performance measurement, that is financial and non-financial indicators. Now, guys, financial performance indicators and non-financial performance indicators, this is a prime area of your examination. Now you can see lots of questions in your examination which are tested for financial and non-financial indicators. After budgets, I think this is the second area, and examiners have shown several times that this is the second area where examiner can ask a 20-mark full-fledged question. The challenge that the student face in this particular area is the theory, is the interpretation of the ratios. Like you were supposed to do the interpretation of the variances, here is another issue that students face, that is the interpretation of ratios. So quickly let's go through a list of financial performance indicators before we move on to non-financials. Now I won't spend too much time on these ratios explaining the purpose of that, because this is all what you have covered in your F2 paper and you have that knowledge in your mind. I won't be discussing the formulas. I've still provided you the formulas, but the only thing I'm going to do is just tell you quickly what is the purpose of a relevant ratio, why a relevant ratio is calculated and what it indicates. So now very carefully listen without any distractions at your end. I'm telling you one by one, I'm just skimming it one by one, what is the purpose of the ratio. Okay, if we start with the return on capital employed, it tells you how much profit the business is generating over its capital employed. Or I should say, capital employed is generating X percentage of profit. So this is return on capital employed, the percentage profit earned by the company on its capital employed. And what is capital employed? It's all asset minus current liabilities. The second is asset turnover. Asset turnover indicates, the answer of asset turnover comes in times. So it indicates how many times the capital employed is generating the sales. How many times the capital employed is generating the sales. So the more the times, the more it is good for the company. Then comes the operating profit margin. Very simple. Operating profit margin tells, usually we call operating profit as PBIT, profit before interest and tax. So it tells you the percentage PBIT, the percentage sales that company has successfully earned. So the percentage PBIT earned on the company's sales. So it indicates the percentage profit on company's sales. Same goes for net profit, the percentage net profit earned on its sales, and same goes for the gross profit, the percentage earned on its gross profit. So when I talk about operating profit, it's percentage operating profit earned on sales, percentage gross profit earned on sales, percentage net profit earned on sales. Got it, everyone? Then comes the EPS, earning per share. What earning per share indicates? Earning per share indicates the profit that the company has earned for its ordinary shareholder. But how we represent it? We represent it like this: profit per share. Profit per share that company has earned for its shareholder. So it represents the per share profit. These are basically liquidity ratios, and you have very good knowledge of these as well, liquidity ratios. So the first you have is a current ratio. What current ratio indicates? It indicates how much current assets company has to pay off its liabilities. How much current assets company has to pay off its liabilities. So this is the ideal ratio, that is you should have $2 to pay $1 liability. Then comes the asset test ratio, which is known as quick ratio. Quick ratio. This ratio deducts the stock. This ratio removes the stock from current assets. And after removing the stock from current assets, it says that how many current assets other than stock the company has to pay off its liabilities. Other than stock, how much current assets company has to pay off its liabilities. Okay, so basically this is used for companies where inventory is slow moving. Wherever inventory is slow moving, you can use asset test ratio, because in that case you cannot rely on your stock. Got it, guys? Inventory turnover period indicates the days it took for a company to sell off its inventory. The days it took for a company to sell off its inventory. Receivable days indicates in how many days the company's customers are paying the company. How many days company customers are taking to clear off the company's receivables. Payable days indicates how many days the company is taking off to pay its creditors. How many days the company is taking to pay off its creditors. This is indicated by accounts payable days. Got it, everyone? I'm sure this is all very simple for you. Then comes the gearing ratios. Now what the gearing ratio is? Financial gearing. There are two ways to measure financial gearing. First formula, second formula. From both the formulas, what actually we measure? We measure the burden of debt. The burden of debt. So, my dear management accountants, financial gearing measures the debt burden of the organization. That how much percent company is relying, on its debts. Got it, everyone? Okay. Then comes the operational gearing. As financial gearing reflects the debt burden, operational gearing indicates the burden of fixed cost. The burden of fixed cost that the company is taking. Now let's suppose if the fixed cost is 80 in your total cost of 100. If the fixed cost is 80 in your total cost of 100, so how much percent will be your fixed cost? So the fixed cost is 80% of your total cost. So if 80% is your fixed cost, so this is a risk for the organization. And why is that? Because we all know in economic recession, when sales are declining, okay, the fixed cost will remain constant. The fixed cost will not change. The sales are going down, but fixed cost remains constant. And this kills profitability. And this completely kills the profitability and reduce the profitability. Okay? So debt burden, financial gearing, fixed cost burden, operational gearing. Interest cover answer is again shown in terms of times, and what it indicates. It indicates how many times the company's profit can pay the finance cost. Actually, it's only one time you have to pay the finance cost annually, depending on the contract. But it tells you how healthy the profits are. It indicates you how healthy your profits are. That is how many times your profit has the ability to pay the finance cost. Okay. Then comes the last one, and that is dividend cover. it also gives the same message like interest cover, and the message is how many times company can pay out its dividends. So it again indicates the ability of the company's profit to pay out the dividends. Now I'm sure you got a fair good idea about the basic F2 ratios, which are also used in F5. Okay. Now, before I move on to non-financial indicators, these all are known as financial indicators. These are all known as financial indicators. But before I move on to the non-financial indicators, I want you to write two other financial indicators which are very, very important for your exam. And let me tell you what are those, and you can just copy that. Two other financial performance indicators. We can call this FPIs, financial performance indicators. Two other FPIs are percentage change in revenue. It is a very important one that you have to calculate. And how will you do it? You will do it current figure, current year figure minus previous year figure divided by previous year. Same is percentage change in profits. And the way is again a similar one. That is current year minus previous year divided by previous year. So this is percentage change in profits and percentage change in revenue. So these are very important ones that you have to work out in almost every situation. So guys, please note down these two as further financial performance indicators. So it's percentage increase in revenue and percentage increase and change in profit. Got it, everyone? Okay. So up till now, any questions? Okay, let me take few questions here. First of all, Nazia, we do have questions for the other transfer pricing approaches that I will tell you the names today. Okay, so you can attempt that. Mohammed Hassan, Hashim, yes, total asset plus long-term equities. I'm not clear what you wrote. Asset test is ignores stock. Yes, it ignores stock because when stock is slow moving item, and what slow moving means that it is not being realized into cash quickly. When stock is a slow moving thing means that it takes time to sell your inventory. So in that case, we do not have to rely on stock, and we try that we, other than stock, we should have sufficient current assets to pay our liabilities. Okay, that's why we do not want to rely on stock. Shabnam, I didn't got your question. What is the difference between? It's not clear here. Okay, financial gearing ratio. I told you financial gearing ratios indicate the burden of debt. So there are two ways to calculate it. So both the formulas are applicable and will indicate the financial gearing, the debt burden. Okay. Okay, if you are precisely asking me what is the difference, so let me tell you quickly. The first formula, now everyone can hear this as well. First formula tells how much percent debt is there in total capital employed. because when you add debt plus equity, you also get capital employed. Okay, this is also capital employed. So the first formula indicates that how much percent debt company has in its capital employed. So when you talk about the total debt equity, how much percent is debt? Okay. The second formula indicates that as a percentage of equity, how much is debt. So as a percentage of equity, it identifies how much is debt. Okay. So the difference is very simple. It tells you in terms of total funds, how much is debt. Okay. And it tells you as a percentage of equity, how much is debt. So second indicates as a percentage of equity, and first tell you as a percentage of total funds. Okay. Now, NFPIs, very important for your exam. And I have limited time here, but I will try my best to transfer maximum knowledge relating to NFPIs. There is less importance in the minds of the people as regard NFPIs, non-financial performance indicators. Okay, but this is wrong. You know, an accountant is never complete if it does not consider NFPIs. Non-financial performance indicators are really important. If you want to check a performance of an organization, you cannot just rely on financials. You have to have focus on NFPIs. For a balanced performance assessment, you should focus on NFPIs and FPIs. So non-financial performance indicators are really crucial, and lack of knowledge in this area creates a lot of problems. When people do go into paper P5, they are lacking a lot there as well. So my dear friends, we still have we are still short of time, but I will try my best to give you the best knowledge as regard NFPIs. Before I move on to NFPIs, I just want to discuss a short concept of critical success factors, which are known as CSFs. Now, what are CSFs? CSFs are the areas of the business, are the most important areas of the business in which company has to win, in which company has to succeed. So CSF are the areas which are important for the success of the organization, critical success factors. Okay, let me give you a quick example here so that you get to know what CSF is. For example, a school. Now, for a school success, what are the key areas? School success key areas are what? Can you tell me quickly? I just want to see 1-2 answers. Good results, pass rates. Okay, anything else? Okay. Now, the success of a school depends on, number one, quality teaching. This is the critical success factor for a school. Organization, a school, if wants to get succeeded, wants to get succeeded, will have to focus on this. Number two, pass rates. Yes, very important. So for a school to be successful, the CSFs will be quality teaching. The CSF will be pass rates. So these are critical factors of success. For a school to be successful, they need to focus on these CSFs. Now, a restaurant where we go and eat, a restaurant success depends on what? Quick suggestions, please. Success of restaurant depends on what? Okay, quality food. Perfect. Quality food. You all know CSFs. What are CSFs? It's very simple. It's the approach, my dear friends, that if it is clear, you can do everything. So you are right. Lot of good answers I got. Quality food. service, food, service, comfort, hygienic conditions, So these are all success factors. Cleanliness, yes. So for a restaurant, there are so many success factors. So my friends, critical success factors are the one that ensures that organization achieve its objective of success. Okay. Now, to ensure that are CSFs being achieved or not, to check whether CSFs are being achieved or not, we need to have KPIs. Now, what are KPIs? KPIs are key performance indicators. What I mean to say by key performance indicators? My dear friends, KPIs are the one that ensures whether CSFs are being achieved or not. So they measure the success of CSF. Are you getting my point? They measure the success of CSFs. So we need to have KPIs. Now KPIs are divided into two. One is financial indicators, second is non-financial indicators. Financial indicators are known as FPIs, and they include all those that we discussed in the previous slide. All those starting from return on capital employed till dividend cover, till percentage increase in profits. So FPIs are all those financial indicators that we just discussed right now. And what are NFPIs, which are non-financial performance indicators, are a one to learn, are a one to understand. Now, my dear friends, for example, if I talk about the NFPIs, and let's link that with some example. So, for example, let me give you a quick example here so that you get to know. There is an organization that wants to achieve profit, that wants to maximize the profit. Okay. Now, profit maximization will not be achieved until and unless you have established critical success factors. So, for example, there is a restaurant and wants to maximize profits. So, restaurant has established success factors. And for example, the first success factor that organization have established is financial growth. Financial growth. Number two, customer satisfaction. Financial growth and customer satisfaction. So these are the, for example, CSFs that they have established for themselves. So how will they check their financial growth? Through percentage sales growth. For example, percentage profit growth, percentage return on capital employed, okay, which is making it quite clear that financial growth will be measured through financial performance indicators, which are known as FPIs. Are you getting my point? But when it comes to measure the customer satisfaction, what becomes important then? Then you need to have some indicators. Then you need to have some KPIs, some indicators, which are not financial. In fact, which are not financial, which are non-financial performance indicators. So you need to have KPIs which are non-financial performance indicators. Now learn this and concentrate. This is the most weakest area of the students. Don't be distracted. Just listen what I'm saying. So what NFPIs will be important to measure customer satisfaction? That is percentage sales return. This is a NFPI, number of repeat customers. This is also an NFPI. Percentage complaints. This is also NFPI. Okay. Percentage claims. This is also NFPI. So these are one that will measure the success of critical success factor non-financially. So my dear friends, try to understand that a balanced performance assessment requires a balance focus on both financial, non-financial. You cannot just rely on one. So critical success factors are the one that will ensure the success. To ensure CSFs are achieved, you need to have in place good KPIs. These KPIs will check these CSFs, and these KPIs could be financial and could as well as be non-financial. And I'm sure you got the difference that what financials are and what NFPIs are. We have a lack of knowledge for NFPIs. You got it, everyone? Every business has its own CSFs. Every business has its own CSF, and every business will have its own KPIs translated into financial and non-financial that will check the success of CSFs. If CSF is achieved, profit will be maximized. Got it? Great. Okay. Now, let me give you a quick example before I move on to the next thing. For example, you and me, we both opened a restaurant. Okay? We both opened a restaurant. And I'm sure we all know that people love food. How many of you like eating? Come on, a quick reply, please. How many of you like eating? People who love food. Just 3? And especially the new things. Right? How many are one who want to test new things? Whenever a new burger comes, a new sandwich is launched, how many of you want, yes, I want to eat that new thing? Yeah, so everyone. So considering this fact that people do try new things a lot, what we all planned, we opened a restaurant. You and me, we opened a restaurant. And we all know that people want to test things. People love testing things. When our restaurant was opened, we did extensive marketing on Facebook, on social media, and things like that, and we opened a restaurant. You cannot imagine what happened. When it was the first month of the restaurant, so much traffic, so many people turned up, because people love to test things. People love to be at new places. And especially if I talk about these days, the people do go to new places and they take a selfie, and then just update their status on Facebook so that whole world gets to know where I am. So, so people came to our restaurant, huge crowd. The success of the restaurant was perfect. Our financial numbers went so high. High GP margin, financial indicators, high net profit margin. high sales growth, and everything was going perfect. And we all were so happy that yes, it's success for us. And yes, we won. The first month passed. Financial results awesome. One of us in our team, there was one and who was intelligent. Come on, who is the intelligent one in our team? A quick answer, please. Okay, so one intelligent one in our team who thought of non-financial. Everyone was focusing on financial. There was a complaint box in a restaurant. Just at the corner, there was a complaint box. And it was just for a formality purpose, we never opened it. One of the intelligent one in our team just opened the complaint box just for, cleaning the complaint box. And once he opened, there were lots of papers that were coming down, like, a rain of papers. A rain of papers came down. And once he started reading, and he was shocked. So pathetic feedback, so pathetic food quality, so much serious dissatisfaction that we never knew. And we thought that we are going towards a success, but my friend, that was just the first time that customer came for the first month because everybody wanted to test. But such bad service, food quality, pathetic feedback was never in front of us. Now, do you think, quickly write it down, will the coming months will have high financial numbers? Come on, reply me. Not at all. Everything will go down. So this gives the best evidence. This gives the best evidence that financial numbers, future success depends on non-financials. Customer satisfaction. If percentage complaints go down, customer is happy. So my friends, non-financial numbers are the one that will ensure the success of future financials. So how come you, me, being an accountant, doing job in a company and have a less knowledge of non-financial? How can our organization go towards a success? So that's why NFPIs are of great importance. In my regular classes, when I teach physically, I give a lot of importance on this area because of shortage of time I cannot. I would love to have this opportunity to explain you that in much more detail, but because of time shortage I cannot. But I gave you an overview of that NFPIs are very important. So the message is strike a balance between these two. Got it, guys? Are you all done with this? Any issue? Okay. So now let's move towards a past paper question, the first past paper question, and let's now solve one question very quickly to do a good rehearsal how this will be tested in the examination. This is our area that will be tested for both financial and non-financial indicators, and you need to have a good knowledge because examiner really expects student to perform well in this particular area. So the question that we are starting right now is December 2012 question. December 2012 question. The question name is Web Company. It's Web Company. Now I want you to quickly have a very good look at the scenario, because I won't read the question again. And for a good interpretation, it is very important to actively read the scenario. So please don't waste your time. I cannot see you people, but I can trust that you all will read this very carefully and just underline what important things you think are important here. These paragraphs that you can see here, just read out these paragraphs very, very quickly. I'm giving you 2.5 minutes for that. Very quickly, actively read the scenario. Okay. Now, this is a web company, an online retailer fashion goods company, and we need to assess the performance of this company. Then this is a 20-mark question, okay? Now, one thing I want to just dictate you a good trick about how to do a good interpretation. So please just hold your pens and start writing it down. Key points you need to remember. These are the key points that you need to remember for a good interpretation. So key points are: number one, calculate the ratio. Calculate the ratio. Both financial and non-financial. Both financial and non-financial. Okay. Number two, compare with comparatives. Compare with comparatives. If available. If available. Okay. Now, what are comparatives? The previous years, the industry averages, the competitor data. So if you have any comparative, you need to compare. And remember, anything without comparison is of no use. Anything which is isolated, you cannot compare. So it is very important that you should compare with anything. Either it be the previous year figures, or it be the competitor, or it be the industry data. Okay. Third, explain the reason. Explain the reason. Just open a bracket. Just open a bracket and write it directly link with the scenario. Directly link with the scenario. Directly link with the scenario. Okay? Just close the bracket. Just close the bracket. Now, it is important to explain the reason. Reason gains lot of marks. And that is what you have to find out from the scenario. How to link from the scenario. This is the art that you have to learn. Link with the scenario. Okay? But sometimes there is lack of information. But sometimes there is lack of information and you cannot find any obvious reason. So what you need to do in that case, I'll explain you while solving the question. If you don't have a direct link, we'll make an indirect link. So kindly do one more thing. Just write it in the same point number 3. Directly link with the scenario or create indirect link. Or create indirect link. I'm sure people are writing. Create indirect link. Done? So we'll try to find a direct link with the scenario. If we do not get any, then we'll try to create some indirect link for the explanation. Got it, everyone? Clear? Okay. Last is conclusion, if required. Conclusion, if required. So let's write it. Conclusion, if required. Okay, now, what we need to do next? Just have a look at the question, what the question is saying. First of all, let me quickly give you a summarized view of the question. Webco is an online retailer fashion goods company, and Webco uses a range of KPIs to measure the performance. Okay. Now, company was facing a lack of sales growth. So what it did, it wanted to resolve the problem, and how it want to. So it makes few changes at the start of quarter 2. Now quarter 1 is the one there in which there are no changes, and quarter 2 is the one there in which there are changes. Okay. So it made few changes at the start of quarter 2. Got it, everyone? Any problem? Okay. So the changes that it made at the start of quarter 2 were given below. It incurred 200,000 on advertisement, and the advertisement was placed on an online fashion magazine. Okay. So 200,000 incurred on advertisement on some kind of an online fashion magazine. SEO, search engine optimization. I'm sure you must have the knowledge of SEO. Google, Yahoo, whenever you search, you get the names of the things that you wanted to see. So it is spent 20,000 on a consultancy fee for SEO. Third, because there were a few problems in Q1 for website availability, it made some changes and tried to resolve the issue, and the IT department had made some changes in the website to correct the problem. Okay. Plus, they also offered two types of incentives. The first was a free fast track delivery service. And what it says that you will be delivered the goods within 2 working days. But the most important point here that people do miss is this service is only for continuing customers who subscribe to the online newsletter. And continuing means a one who placed further orders. It's not a customer who's coming for the first time and not coming again will not get this service. Continuing means repeat orders, repeat customers. Repeat orders, repeat customers. Okay? Incentive 2. 10% discount will be given to customers who spend 100 or more at any one time. 100 or more at any one time. Got it, everyone? These are the data given to you. So what you have to do as per my instruction, you have to try to calculate ratios wherever possible. Okay? Assess the performance of the business in Q2 in relation to the changes and incentives that the company introduced at the beginning of this quarter. Plus, your examiner is allowing you to clearly state where you require further information. Sometimes we do not know how to use this. So if there is any lack of information, you mention your examiner that this is something we need to have more grip on. We don't have any information in this regard. So you can mention that. But it's not that you have mentioned everywhere that there is a lack of information. So I'm sure that would become strange. Plus you have to conclude about what? Whether changes and incentives have been effective or not. So this is the conclusion that you have to give here. Okay? So first of all, let's apply the tactic that I told you. And that was what? Calculates the ratio. So ratio calculation you need to do first. So just have a look. How will you do all this ratio calculation? So the ratio calculation will be done on the basis of few things that are given here. So let's try to find out what I can work out. Now very carefully listen what I am working out here. The first thing I can work out is total sales revenue. From total sales revenue, I can work out percentage increase in revenue. So let's do few calculations here and calculate the percentage increase in revenue. Working area. I'll explain you how to draft it, okay, at the end. Percentage increase in sales. So the working will be 2750 minus 2200 divided by 2200, and the answer is 25% increase. Got it? What's next that I can work out? Net profit margin is already in percentage, so I don't have to work out, don't have to calculate any ratio of that. If something is already in percentage, so you don't have to do anything, you just have to use that for your comments. Then comes total number of orders from customers. So what I can work out here using this, I can work out what? Percentage increase in number of orders. Percentage increase in number of orders I can work out. Okay, so let's work out that. Percentage increase in orders. Got it? So if I work out percentage increase in orders, so how will I do it? The orders are 49.6 minus 40.636 divided by 40.636, and what is the answer that we get of the percentage increase in orders will be, I think, 22%. Okay. Guys, is this clear up till now? 22%. Then what else I can work out? I'm just telling you the selection of the ratios. Total number of visits to website. What I can work out? Percentage increase in website hits. Try to calculate something in ratio. Percentage increase in website hits. So I'll be calculating percentage increase in websites in the same fashion as I did the calculation for the previous one, and the answer of that will be 39.5%. Getting my point, everyone? Is this clear? 141,714 minus 101,589, 101,589. What else can I work out here? Is conversion rate is already in percentages, so we just have to use it. Then what I'll work out in the next phase is percentage of total visitors accessing website through magazine link. No need to. This is all we'll discuss. Website availability is already in percentage terms, so we don't have to. Number of customers spending more than 100 per visits. What I can work out using this is the percentage increase in customers. Customers who are taking discount. So if I calculate the percentage of that, so the answer of that will be, you can easily work out that as well, who are taking discount is 6390 minus 4650 divided by 4650. So it's 37.4% increase. Okay. The last what we can do is we can work out percentage increase in online newsletters. Percentage increase in newsletters. So the answer of that will be 159%. So one thing that you saw here was maximum things I work out as a percentage of change. Percentage increase in this, percentage increase in that. So this is most common thing that you have to work out. Okay? Did you got it, everyone? Is this clear? Okay. Now let's move to the interpretation side. Percentage increase in customer taking discount of $100. This I worked out. This is newsletters, this is website hits, this is orders, and this is sales increase. Got it? Now let's discuss, and I need your input. I'll be explaining you in very detailed way. I need your input here. So please do give me your inputs. This is the time that once again we'll communicate with each other. First of all, are these all financial or there are non-financial as well? Quick answers. Both. Okay. Yes, both. These are both. So there is a mix of financial and non-financial. So the mainly financials are what? For example, revenue, net profit margin are financials, right? But things like conversion rate, website availability, number of website hits, these are all non-financial. So there is a mixture of financial and non-financial. Okay. So the procedure that I told you was simple. 4 points. Now I'm pacing up here. Come on, be with me. 4 points. Calculate the ratios. Number 2, compare wherever possible. Number 3, reason. Reasons would be 2, direct or indirect. So learn how direct reason is and learn how indirect reason is. I tell you the tactics of both. Okay. Last is conclusion. Now let's start. Don't discuss right now how to draft. I'll tell you how to draft the answer. Just be with me here. See the slides. This is a very good way to explain, a unique way to explain each and everything. Financial ratios, sales growth. First, you need to calculate the ratio that we did. Then you are required to compare. Second, then you are required to explain. Third, okay. Now there was a 25% increase in revenue. What are the reasons? What are the reasons of that? Try to create a direct link with the scenario. Learn the art. Create a direct link with the scenario. So how will you do it? Guys, percentage increase was 25%. Okay. So what are the reasons for that? The reasons are quite simple, and those are: refer to the changes. What changes? There were 3 major changes. First, advertising. Simple, direct link. This is direct link. Consultancy. This is direct link. And incentives that were launched. Incentives that were launched. You got it? So it's quite easy that advertising, consultancy work, and the changes made by the company, like 10% discount, this resulted in increase in sales revenue. That's it. So this is what I mean to say by direct link. This was clearly given in the scenario, my friends. The changes were clearly highlighted in the scenario. Did you got it? Simple. Okay. Let's move on. Is this clear? A quick yes from people. Net profit margin. Net profit margin. And just understand the mind-blowing technique I'm telling you. Margin decreased by from 25 to 60.7. So this is how you are comparing here again. What are the reasons? I need your suggestions. Can you create any direct link with the scenario? Is there any reason clearly mentioned in the scenario that you can say that this is the reason for the decline in net profit margin? Quickly, I need your answers. Please be with me. Come on, tell me the reasons. A lot of fixed cost, high costs, increase in sales, increase in expense. Yes, extra cost advertisement, more expensive advertisement. Okay, what else? What else? cost of sales increased. What else? More operating expenses. Okay. Only few were to the point, the rest was all general. So don't write general, my friends. Don't write general. Try to create a direct link if there is available. If it is not, then that's another issue. So what is the link? The net profit margin decreased. Okay. I will want to do few workings here before I move on to the reason. And then I'll teach you how I am linking these two. If you are with me, keep calculator in your hand. If you want to understand this, keep a calculator in your hand. Okay. Now what I'm doing here, by looking at the question, previous quarter the net profit was 25. This quarter it's 16.5. So this quarter, the sales revenue was 2750,000. If I multiply this with 16.7, so what answer I'm gonna get? Now quickly work out and tell me please. 2750 multiplied by 16.7 will give you 459,250. Got it? If in this quarter we would have maintained the ratio of 25%, which was in previous quarter, which we failed to do it. If we would have maintained this ratio of 25%, how much would our profit in that case would have been? It's 687,500. Getting my point, everyone? So if we would have maintained 25%, the answer is this. But our percentage was 16.7, so the answer is this. So let's calculate in absolute amount the reduction in our net profit had it not been 25. So the reduction is by how much? The reduction is by 459,250 if you deduct. So reduction is by 228,250. This is the reduction in profit. Guys, is this clear? So what I did, I worked out my net profit figure and then I assumed if my net profit would have been 25. So what would have been the figure in that case? The figure will be this one. If I deduct this one, so the reduction came to 28,250. So this means my net profit reduced from the previous quarter. If I compare with previous quarter, so my net profit reduced by 228,250. So what is the reason for that? Who is responsible for all these? So my dear friends, just see the figure. 259,250, 687,500. This is what I've done here. This resulted in a difference of 228. Now let's find the breakup. Let's find the breakup of 228. So the breakup is, this is very good quantification. If you want to earn high marks, my friends, quantify it. Quantify it. So 228,000 breakup is 200 was spent on advertisement. You liked it. Perfect. 20,000 was paid for consultancy. So this makes how much? 220. And the remaining figure of 8250 Maybe because of the discount you have offered or the fast track delivery service cost. Perfect and not at all difficult. Quantify. This is a direct link, my friends. Direct link I've done here. Again, this is a direct link with the scenario, and you would earn high marks. I can give you guarantee for that. Very high marks. So this is a breakup of 228,000. 200,000 was spent on advertising, 20,000 on consultancy, and 8250 on the discount. Liked it? A quick feedback. Okay, so this is the best quantification that I've done. Quantify, try to quantify, make a direct link. This is not a F2 paper, my friends. Try to open your eyes. It's not what you can rectify every time and just write the same reason. I don't understand why people ask me, sir, rectify, how can you do it? Okay, so remaining 8250 is maybe due to discounts or the cost of the providing fast track delivery service. Done? So this is what I've done here. I've quantified the things for you. Now, let's move on to the next one. And what's that? Okay, one question came that there is short of time. Now, I'm telling you a way out of it at that as well. If there is a short of time, which is the case mainly, there is a lot of short of time. Don't do these workings that I did here. Don't do these workings. Just mention at least mention these reasons. If you are short of time in the paper, so you are not required to do these workings. Are you getting the way out? What the way out is? You don't quantify like this, but at least the minimum what you were supposed to write here was the minimum that you were supposed to write here was about 200,000, 20,000, about the quantified cost, and the remaining you would have said that the cost would have increased because of discounts and faster delivery service. Getting my point? So I'm telling you the two extremes. The first is do the entire quantification. This is best if you want to get position. How many of you want to get position? Those who want position will have to quantify it the way I did. But those who say no, we just want to pass. We just want to pass. How many there who just want to pass? Those who want to pass should have written at least that 200,000 was spent on advertisement, 20,000 was spent on consultancy, and the rest cost would have incurred because of discount and fast track delivery service. Guys, got it? So I'm telling you the two extremes. Position people will quantify it in detail. Those who want 50 should just write the basic reasons, should just directly link with the scenario. Okay. The next, number of website hits increased by 39.5%, which is actually 40,125. So what is the reason for that? Why 39.5% increased? Come on, I need quick answers from you people. Come on, please be fast. Why website hits increased by 39.5%? Any reason? Okay, now listen, now listen, now listen. Good. The reason is once again quite clear, and I'll try to quantify. Okay, then we'll tell you the way out again, what minimum you have to do in the paper. First of all, let me do a few workings here. How many people came through magazine link? In the question, if you look here, it's written 19.9% came through the magazine link. 19.9% came through the magazine link. Okay. If total visits this quarter is 141, if total visits this quarter is 141 and 19.9 came through magazine link. So let's calculate by multiplying 19.9 with this figure. Let's calculate how many came through magazine link in the total number. Can we do it? Yes, we can do it. It's not that much difficult. So let's do it. 141,714 multiplied by 0.199, which tells us that 28,201 came through magazine link. You got it, everyone? How I worked out 28,000? The working was very simple, and what I did here, I multiplied 141,714 with 19.9. So the total increase was by 4125. Total increase was by 4125. Okay. And the people who came through magazine link were 28,201. So if I deduct from 4125 the people who came through magazine link, so I'll get a number that is 11,924. 11,924 will be the people who came through SEO, search engine optimization. So this is here I again quantify, my friends, I again quantified, try to quantify here. And the message is quite clear that total increase was by 4125. 19.9% came through the magazine link, which is 28,201. If I deduct this from 4125, I got 11,924 that came through SEO. So yes, the reason for the increase in the number of website hit was because of the two reasons, and the reasons are in front of you. If you look here, reason number one is quite clear, that 28,000 people came through the magazine link. Okay, and remaining came from the SEO. Just quickly read out the reason here. Please just read out the reason. Okay, So the reason is quite clear. 28,000 came from the magazine, where the remainder came from the consultants. You like the way I did quantification. And this is the breakup of the working. Now, very carefully listen, open your ears so that you do not get confused and you do not get tensed. Option 1, position, one position. How many need position? Come on, write it there. How many need position? I want to see. Anyone who want position? Okay. Those who want position, they will have to quantify in the way that I did. They will do this kind of calculation that I did right now in front of you. Position holders. And I can proudly say that there are lots of students that got position by using the techniques that I told them. And maybe you were one of the position holders. Okay? So, those who want position have to go for this breakup. 28,000, 11,000 came from this, 28 came from this. Now, who just want to pass? Come on, who just want to pass? Quickly. Who just want to pass? People who just want 50 people who want 50%. Now, who just want to pass will have to write minimum what? Minimum what? Don't quantify, just write it what? Website hits increase because of the consultancy work and the magazine link. Consultancy work, magazine link. This is a direct link they are doing with the scenario. This is a direct link. Again, this is a direct link. So at least write this only. Those who do not want position and need 50 marks. But those who require higher marks, make sure guys you quantify it. And this is a direct link with the scenario. Okay. So this is how I quantified. Quickly, let's see. Total number of visits is 4125, that increased. Number 2, 19.9% came from magazine link as given in the question. So I worked out 19.9% multiplied by the total 141,000 of the website hits. The remaining was through SEO. Now the last thing I want to tell you. What do you think? Which way was more cost effective? Which way proved more cost effective? Is magazine cost effective or the other one? Come on. Magazine or SEO? Okay, now listen. Consultant work was more cost effective. Why? It's simple. You paid 200,000. You paid 200,000. For what? For advertisement. From 200,000, you got how many visitors? 28,000 visitors you got. 28,000. Okay? By paying 200,000. And in consultancy case, you paid just 20,000. Just 20,000 and you got 11,000 people. 11,000 people. So more cost effective is SEO rather than advertisement. 200,000 too much for 28,000 people, and just 20,000 you paid to obtain 11,000. So SEO is more cost effective. Got it, guys? Okay. I'm sure you like the way I'm quantifying, but don't be tensed. If you cannot quantify, just write the direct reasons from the scenario. Now let's move on to the next and few remaining ones. Conversion rate gone down from 40 to 35. Now who will tell me the reason? Is there any direct reason? Come on, tell me, give me the answer. This is these 5-10 minutes are important. Conversion rate gone down. First tell me, is there any direct reason in the scenario that you can say, yes, this is the reason it went down? What is the direct reason? Come on. Is there any direct reason mentioned in the scenario? No. There is no direct reason given in the scenario. There is no direct link given in the scenario. No link given. Okay? Now, if there is no link given, then we'll go for a tactic naming indirect link. And what's indirect link? I will use some other indicator for linking. I will create an indirect link. We'll use some other NFPI and we'll link with that. To find indirect link, learn the tactic how to do indirect link. I will use some other NFPI here to create an indirect link. And what is that? If you look at the previous reason of number of visits, it's quite clear. A big number came from magazine, 28,000 came from magazine, and 11,000 came from SEO. 28,000 came from magazine, 11,000 came from SEO. I am creating an indirect link with another indicator. Learn this art. And what's that? Guys, as 28,000 people came from advertising in magazine, which means there are less genuine customers coming from magazine, because people coming from magazine, advertising, fashion magazine, are a one who just came for the curiosity. For example, you are seeing a fashion magazine. You are seeing a fashion magazine, and you just came. You saw a link, and you just clicked that link, and the window opened. And you just gone to the website. You never wanted to buy because it was just because of the curiosity that you came to that website. Guys, if the link is available in the magazine, so this means that more people, 28,000 visited the website, but less chances that they'll buy. What is conversion? Conversion means those who came, how many bought? Those who came, out of those who came, how many bought? This is conversion rate. The people who are visiting, are they buying or not? This is conversion. So the people who came from magazine there are chances that will not make purchases because they just came to survey. They were in a magazine page and they just came to your website. So maybe they come back later and purchase. They come back and later purchase. But the people who are coming from SEO seems to be more genuine one, because the person who wants to buy the fashion goods, if you want to buy the fashion goods, what you'll do, you'll write in the Google or a Yahoo, and you'll see the best companies selling the fashion goods, and you'll click that company and will make a purchase. So my friends, a genuine customer is more likely, I'm using the word more likely, a genuine customer is more likely to come through SEO rather than magazine link. SEO people who are coming from SEO will definitely input and then see the companies and will come and make a purchase. You got my point? This is a very valid point. And see the way I'm doing indirect link. I am linking conversion rate reduction with what? With another NFPI. And what was that? That was increase in websites. Nothing was mentioned, but I created the link. So people who came through advertising magazine will be a one that would be thought to be less genuine because they just came of curiosity, but the people who are typing in Google are one who thought to be more genuine, because 28,000 came from advertising and just 11,000 came from SEO. So one can say is that many artificial people came, but they didn't bought. If they didn't bought, they just came there, they just saw the website, and when they didn't bought, so that's why the ratio of conversion went down. Like the reason? Quick feedback, please. Did you like it? So this is indirect link I created here. I'm sure you got my point. With another NFPI. Done, everyone? Got it? What indirect link is? Okay? Thank you. Let's move on quickly. Now, we need to just wind up this. So, can you tell me about website availability? It remained the same. It remained the same. Why it remained the same? It didn't change. It remained at 95%, which means did IT people work? Yes, they did work. They did try to resolve the issue, but but the availability didn't change. So what you will comment here? Any direct reason here? Any direct reason that you can say website availability remained unchanged? There is no direct reason. There is no direct reason. In fact, this is an area where I require further information, because they did make changes which haven't corrected the problem, and I will require further information. So guys, you are allowed to write about further information. The examiner gave you the chance to tell about further information. So use this, but not in every case, and this requires further information because nothing has changed. The last is online newsletter increased by a massive 159. Now you know this is for fast track delivery service. Now, is there any direct link for this increase? Yes, there is a link that the company initiated fast track delivery service, but still we need information which is missing. And what's that information? For example, number of repeat people coming. So sir, why you are saying repeat people information is important? Because my friends, if you have observed here, so just have a look at fast track delivery service. This is for all continuing customers, the one who place further orders, and you do not have any information that how many came back. How many came back? You don't have information of the people who placed further orders. You don't have information of the repeat customers. So yes, the reason is fast track delivery service, which was mentioned in the question, but it's not clear what impact this has had on the business, as we do not have repeat customers and further information is needed here. Got it, guys? So I'm sure you liked the way the interpretation was done. And direct link and indirect link understanding, I'm sure you got it. So try to find a link from scenario. This is the best way of explanation. The last point was subscriber to online newsletters. subscriber to newsletters, point was that how many people came to the business again. So no information was given about the repeat customers here, though it increased by 159%, but to measure the exact impact of this on the business, we need further information as regard how many came back, because this service is given only to those who came again. It's easy to subscribe. Now you are a customer, you came to the business for the first time, you subscribe. Subscribing only does not mean that you'll come again. Getting my point? So if subscribers increased, it does not mean that you got the customers back. Are you getting my point? So don't think that you got customers back. People have just subscribed to the newsletter, but actually how many got the service? For that you need number of repeat customers. Subscription alone is not enough. So there is no reason given here, no impact given here that whether it had any impact on the business, but yes, the increase is because of fast track delivery service. Guys, the last thing is to conclude. Now, how to conclude? Just learn the art to conclude. Just identify the major issues. Don't repeat everything again. So what were the major issues that we found in the question? What were the major issues? Which changes didn't work well? Just tell about those only. Those that worked well were all good, but those didn't work well are the one that you need to highlight. So with the exception of few things, all other measures seem to have increased the sales. You got it? So this is the best way to conclude. In conclusion, we do not repeat everything again. We just highlight the few issues. So what I wrote, with the exception of few, all other things have increased the sales. Now just highlight the issue. Now what's the issue? The issue was in couple of areas, like the advertisement was too expensive. It was not at all cost effective. Advertisement was too expensive. I'm sure you must agree with me on this point, because 200,000 were spent for just 28,000 people who visited the website. Got it? So this was the most important point here that you had to make, that advertising was not at all cost effective. That was done through the magazine link, and this expenditure was too high. Guys, is this clear? So this is how we conclude. And one thing was more here that you could have mentioned about that website availability didn't improve. Okay, so this is what you can mention here as well. Website availability didn't improve, which was important again. So the best way to conclude, my friends, is that just highlight the major problems. All those things that you think are okay, just mention that all was well except for these, like advertisement and website availability. So this is how a 20-mark question will be shown. I hope you would have learned a lot from this. What do you think? What's your feedback? Was this effective or not? Come on, please. Because I believe a lot in feedbacks. So was this effective? Okay, perfect. So I'm sure in this short period of time, you must have learned the trick of 4 points: ratio, compare, direct reasoning first. Try to find the further scenario. Then indirectly link with some other thing. Okay, and then conclude. In conclusion, just highlight the major issues, not everything. Now it's time for a break. Let's take a 5-minute break and we'll join back at 12:10 Pakistan time and we'll start with another topic. So let's take a 5-minute break. Thank you. Okay. Now, guys, one thing I will first discuss, that is balance scorecard, because a lot of people ask me to discuss balance scorecard and relevant costing. So I'll do a discussion on these two so that the problem gets resolved in these two cases. Now, the balance scorecard is basically a model which covers both financial and non-financial. It covers both financial and non-financial. Okay, so balance scorecard is a model that covers both financial and non-financial. Uh, there are four perspectives in a scorecard, that is financial, customer, internal, and innovation and learning. Okay, so considering balance scorecard, if you want to check a company's performance, then you apply scorecard on it. If you apply scorecard on it, so it will give you a balanced impression. It will ensure a balanced performance assessment was being made. Okay, so there are four perspectives to that. The first perspective sees that whether the company is creating value for its shareholders or not. So when you are applying balance scorecard in any company, so my friends, first, what you have to do, first you have to see whether the company is achieving the financial perspective or not. So you need to measure financial perspective using KPIs like financial performance indicators. So financial perspective will be measured using FPIs, financial performance indicators. All those we have discussed. So this will ensure whether shareholder value has been created or not. Then it says it is important that your customer should be satisfied. So then you have to see whether customer is satisfied or not. So customer satisfaction requires NFPIs, non-financial performance indicators. For example, we discussed percentage of defects, percentage on-time delivery, satisfaction ratings. These NFPIs will then give you an impression whether customer is satisfied or not. Got it? Then it says that measuring the business internal efficiency is important. The productivity of the business is important. So you need to measure the productivity of the business. If the business productivity is good, then business is internally efficient. So it is important that internal efficiency of the business needs to be checked. For every successful business, internal efficiency is important. So you need to check the internal efficiency through, again, non-financial performance indicators like cycle time. So what is cycle time? How many days it took to complete a job? Cycle time. The more the days, the less efficient the company is. So cycle time should be seen. Labor turnover. The more people who leave the organization, which means the more business is not producing productive results. So labor turnover will also indicate lack of efficiency. So the internal perspective of the scorecard focuses on whether the business is efficiently working or not. And you need to measure through NFPIs. Then comes the area of innovation and learning. So what's that? Innovation and learning perspective says that how the business is developing its future, how the business is creating its future value, how the business is creating its future value, how it is developing itself for the future. So for the business success, it is important that business should develop its future. So to ensure whether business is securing its future, it needs to develop new products, it needs to train the employees, it needs to develop new skills so that business can adopt the changing environment. So this fourth perspective is innovation and learning. Does the business innovating and learning to improve its future? So you have to check this through KPIs again, which could be both financial and non-financial, and those KPIs could be percentage of income from new products. So this is representing what? If income from new products is high, this means that you are doing good innovation. Percentage of time spent on staff training. If the time spent on staff training is more, then this means you are creating the bunch of skills that people should possess. So my dear friends, balanced scorecard has 4 perspectives. These perspectives are actually linked with the company's primary objective. If company achieves these 4 perspectives, then its primary objective will be achieved. So for successful business, these 4 perspectives should be well covered. This model was made by Dr. Kaplan and Norton, who researched all those top companies to find out why those top companies were top. And they found out that all the top companies have a balance of 4 things: that they are creating value for their shareholders, they are satisfying their customer needs, their internal efficiency of the business is good, and their future is secured because they are doing innovation and learning. So that's why this model came into function. And if you want to check whether the company is going towards a balance or not, apply the scorecard, check the 4 perspectives using financial KPIs and non-financial KPIs, and then you'll get to know whether the company is creating a balance or not. So this is balanced scorecard. First check financial perspective, then customer perspective, then internal efficiency perspective, and then innovation and learning. Okay. So this was an overview that I gave you for the scorecard. Got it, guys? It uses both financial and non-financials. Now, the last area for this revision session is relevant costing. I'm afraid I cannot solve a question because of time shortage, but I will be discussing the basic concepts that will help you out and will let you know the question that was also attached in the documents. You can solve that later on. Relevant costing is a decision-making technique. You need to understand the basic terms. For a cost to be relevant for a decision, it should be, number 1, a future cash flow. It should be a future cash flow. If a cost is to be relevant for a decision, it should be a future cash flow. Okay? So, a cost to be relevant, it will be either incremental cost or it will be opportunity cost. Now, if it's incremental, then too it is a relevant cost. If it is opportunity cost, then too it is a relevant cost. So remember these 2 things. A cost will only be relevant if it is either incremental or opportunity. What is incremental? Because of your decision, anything that increases or decreases, is a relevant cost. For example, you are opening up, you have one factory. The cost of the factory is 100,000. Now you are planning to open factory number 2, and the total cost of both will be 250,000. But for factory 2 opening, But for factory 2 opening, what is the incremental? So the incremental is 1,50,000. This is incremental cost that increases because of a decision. So guys, if anything increases or decreases because of a decision, will come under incremental. So for a cost to be relevant, it should either be incremental or opportunity. And what is opportunity? The benefit foregone is opportunity cost. For example, you have a job of $5,000. Now you got a job offer, a new job offer of, for example, $6,000. The decision you will take will be, you will go for job 2. So what you are leaving, what you are foregoing, what benefit you are leaving is job 1, $5,000. And that job 1, $5,000 is opportunity cost, the cost of benefit foregone. So my friends, for decision making purpose, it is important that either it should be incremental or opportunity. And this is basically, you need to remember. A cost that will be irrelevant will either be a sunk cost, which is known as a past cost. What is past cost? Already had been incurred in the past. So if it's already incurred in the past, it will be irrelevant for the decision. Past cost. At the time of taking the decision, the cost has already incurred is a sunk cost. Like research and development cost. Usually you do research and development. After that you decide you have to make or not. But the decision whether to make the product or not will not recover the research development cost. For example, if you are not making the product, then 2 R&D costs have been incurred. If you are making the product, then 2 R&D costs have been incurred. So the past cost is sunk cost. Committed cost, what's that? A cost that you will incur in future. Now this is a bit tricky thing. Incur in future, but still it is irrelevant. Now you would say, sir, you said relevant costs are future cash flows, as you mentioned here, but why not this is a relevant cash flow then? Because my friend, it will incur in future, but the commitment to incur was made in past. The commitment to incur was made in past. That was made in past. So the commitment to incur was made in past. Got it? So this is irrelevant. Like fixed cost is a committed cost. In any case, you have to pay. For example, labor salaries are committed costs. In any case, you have to pay. For example, guaranteed minimum wage. Guaranteed minimum wage. In any case, you have to pay the guaranteed amount that you have promised. Even though you'll incur all those in future, but the commitment has been made in past. So that's irrelevant for decision making. And anything which is non-cash flow like depreciations will not be a relevant cost. So my friends, this is rule of 5. Remember the rule of 5, you can solve any question. any sort of, with no issues. So when the cost is relevant, it will either be incremental, because the decision it will increase or decrease, or it will be opportunity. And if the cost is irrelevant, it will be either sunk, either committed. Sunk means already incurred in the past. Committed means will incur in the future, but the commitment was made in past, so it's irrelevant. And non-cash flow. Got it? Now, we will use the relevant costing techniques on one-off contract. Now, one-off contract means a contract that is a one-time opportunity, and in this one-off contract calculation, because I'll be giving you a question, high life company today, it's already attached here, that you will solve and will give me feedback today on WhatsApp group. All those are new to the lectures who haven't yet sent me the message on the WhatsApp group, because after that, after debrief, we won't have any interaction here. So I'll be updating lots of things, especially the upcoming guests for this June attempt. So I'll be giving the guest topics for June attempt. All that I will be updating on the WhatsApp group. So the only main mode of communication will be that group. So please, all those who are new still and haven't sent me the messages, kindly, this is the last opportunity you have to send me the messages on this number, the WhatsApp number, and you will be updated with all later on things. I'll be giving you a lot of support there, plus the upcoming guests, which is simply important for people. What is expected, high priority topics, all will be updated there. So make sure, if you haven't yet joined the group, haven't yet sent me the message on this particular number, so please do send me. It's 2436 Okay. So the one-off contract, we'll use this on one-off contract. So you'll be sending the answers to me on the group. That's why just learn the basis. One-off contract is a one-off opportunity which you take up in your spare capacity. This is the first assumption. These are the assumptions that I'm telling you here. Okay. Number two, it provides a minimum cost. By using the relevant cost principles, it provides a minimum lowest cost. So once people will submit me the answers, then I'll explain what the lowest cost is on the group. So it provides the minimum cost, which is the lowest cost. Number three, you need to assume that while costing for one-off contract, you will assume that it will not be rejected. So this is what you have to assume, that you have to give priority to one-off contract. While doing the costing, you have to think that you have to give priority to the one-off contract. Okay. Now, so the priority will be given to the one-off contract. This is the assumption that you have to take here. So let's move on to the next thing. In one-off contract, how will you do the material calculation? So let me give you a quick example of that. For example, you have to use material on a one-off contract. Now, what first thing you will see? Is the material available in the warehouse? If the material is available in the warehouse, or if it is not available. So if it is not available in the warehouse, then you will buy the material. And the cost of buying will be the incremental cost Are you getting my point? I'm creating a connection with rule of 5. It would become very easy for you. I'm creating the link with rule of 5. This is something unique for you people, okay? The rule of 5 is everything. So I'm creating a link of every possibility with the rule of 5. So cost of buying will be incremental cost. Because if you are buying the material for the one-off contract and you don't have available, so the relevant cost will be cost of buying. Got it? Okay. But if you have the material in warehouse, so you need to check then whether you use that particular material regularly for some other work. Whether you use that material regularly for some other work, this is what you have to check here. So if you do use that material for some other work and you use the material for one-off contract, try to listen. So if you use that material for some other work, if the answer is yes, so you gave that material to one-off contract. You gave that material to one-off contract, which you were using at some other work. So now, what you need to do, you need to buy the material for that other work. And it will be the replacement cost that you will buy at. So you need to replace the material. Are you getting my point? So what's the replacement cost? It's simple. Just listen what I'm saying. You had material in warehouse which you were using regularly for some other work. Okay? So what you did? You transferred that material of some other work to one-off contract. Okay? Transferred. Now you will buy the material because you have given to one-off contract. So now you will buy the material for some other work. Buy for some other work. Okay? So when you buy the material for some other work, so it will be the replacement cost. So it will be the replacement cost on which you will buy it. And replacement cost means the current purchase cost. It means the current purchase cost. So guys, you will buy this material for one-off you will buy this material for some other work. And you will charge that purchase cost, replacement cost to one-off contract, because all this happened because of one-off contract. Got it? Done? Is this clear? So the case is very simple. If material is regularly used for some other work, then you will give that material to one-off contract and you will buy the material for that some other work, and whatever the cost is, that is the current purchase cost, which is known as replacement cost, which is the cost of buying, will be charged to one-off contract, and that is known as incremental. Okay? Last, if the material you have in warehouse has no regular use, so you will use that material for one-off contract. one-off contract, you will use that material for one-off contract, and you will lose opportunity like scrap on that, because if you have material and it is of no use, so what you'll do, you'll scrap it. So you will lose the opportunity to scrap it, because scrap will give you income. So my friends, that loss of scrap value of that material is opportunity cost, because scrap will give you a benefit and you are losing that benefit. So that loss of benefit is opportunity cost. This is again rule of 5, opportunity cost. This was incremental and this is opportunity cost. Are you getting my point? So once you use the one-off material on one-off contract, what you lose, don't go till 1 o'clock, be with me, it is important. So the opportunity cost will be the loss of scrap value. So if you have any material in warehouse which is of no use, if you use on one-off contract, what benefit you lose is scrap value. This will be opportunity cost, will be charged to one-off contract. Got it, guys? So this is incremental, this is opportunity. Now same goes for labor. If you have a labor already appointed and it's idle, which means he doesn't have any work, no work, but you are paying the labor, but you are paying that labor. Now if you use the labor for one-off contract, then the relevant cost will be 0, because this is committed cost. Creating a link with rule of 5. This is committed cost. Why committed cost? Because the labor is already appointed. You are already paying that labor. He or she is idle because of maybe lower demand of some regular work that you do. Now if you use that for one-off contract, so using that labor for one-off contract will have no incremental cost, because you are already paying that labor, so nothing will be charged to one-off contract, because this is committed cost. Even you take up the one-off contract, even you lose it, you have to pay the labor, because this is idle hours. Okay? But if labor is busy, other option what you have is labor is busy. If labor is busy, then you have one option that if labor is busy, I'm discussing this one, and if you ask the labor to work overtime on one-off contract, so whatever he is working overtime on one-off contract will be the relevant cost, and this is incremental cost. The overtime cost is incremental cost. So if the appointed labor is working overtime other than the normal work he is doing, if he is working overtime for one-off contract, the cost of overtime will be relevant cost, incremental. Next, if you are appointing the labor specifically for the one-off contract, specifically, so the hiring cost will be incremental cost. Hiring cost will be incremental cost. Are you getting my point? So if working overtime, overtime cost, incremental cost. If you are specifically hiring, hiring cost will be incremental cost. If your labor is appointed, doesn't have any work, and if you are using that labor for one-off contract, then the relevant cost will be nil. Now the last thing, if your labor is working in regular use, and you cannot ask him to work overtime, no overtime, neither you can hire any labor from outside. Is busy in regular use, okay? Neither you can ask him to work overtime, neither any outside labor is available, like the option 3 and 4 I discussed. So what you will do? You will divert the labor from regular use. Divert the labor from regular use to one-off contract. Now, if you divert the labor from regular use to one-off contract, if you divert the labor from regular use to one-off contract, what you will lose? What you will lose? You will lose contribution margin. You will lose contribution, because once, my friends, you divert the labor from regular work to one-off contract, so your regular work will stop, and if your regular work will stop, you will lose contribution on regular work, and if you lose contribution on regular work, that loss is because of one-off contract. So the contribution that you are losing means the benefit you are losing on regular product. And why is that? Is because you are transferring the labor towards one-off contract. In that case, this loss will be treated as opportunity cost. Will be treated as opportunity cost. So this loss will be charged along with the direct labor cost. Remember, this is sum. This loss will be charged along with the direct labor cost to the one-off contract. This loss of contribution is opportunity cost. And this happens when there is no overtime opportunity and no outside hiring could be done. So the relevant cost will be sum of direct labor cost and loss of contribution. This is opportunity cost. So just learn what I'm doing. I'm creating a ring with rule of 5. The last thing, my friends, after that I'll give you a quick message, how to study, what the way of plan should be. So don't leave till 1 o'clock. I won't take any time above 1, but be with me till 1 o'clock. And further plans I'll update. Relevant cost of overheads. Remember, variable overhead is always relevant. This is incremental cost. Variable overhead is one that varies with the level of output. If output increases, variable overhead will increase. Okay. Number 2, fixed overheads. Fixed overheads had 2 cases. Always irrelevant. Why? Because either it will be sunk cost, rental, salaries of the labor, or it will be committed cost. Again, rule of 5 is coming here. Either it will be sunk cost or either it will be committed cost. Getting my point? So it is irrelevant. But there is one exception. When the fixed overheads is directly related or directly attributable, we say. If it's directly related, then only it is a very relevant cost. then only it's a relevant cost. Is this clear, everyone? Then only it's a relevant cost. So if it pertains to a decision specifically, so it's relevant cost. Let's take a quick example. You have one place rented out at 10,000. Okay? At 10,000. Now, if you are taking one more place, the additional rent is 2,000. The additional rent is 2,000, and this is space you are taking for one-off contract. For one-off contract. So, this additional rent that you are paying because of the space that you rented out for one-off contract is directly attributable. Though it is fixed in nature, but it is relevant because this was incurred specifically for one-off contract, and in that case, my friend, this will be incremental cost. Incremental cost. So have you seen the use of rule of 5? This is a magical thing. Anything you don't get to know, apply rule of 5, you will get the answer. Incremental, opportunity will make it relevant. Some committed non-cash flow will make it irrelevant. And this was all about relevant costing, one-off contract. Now we don't have the time for past paper. There is a question, High Life Company. Just note down the year I'm telling you here. The question is High Life Company. Let me tell you the year of that. It's December 14 question, High Life Company. December 14 question, High Life Company, that you do try in your exam, before your exam, and just send me the snapshot on WhatsApp group, the answer that you worked out. This will be solved using the rule of 5 that I explained you. And do try this question at your home and just send me the snapshot of that, so that this is the question. Okay, so this is what you have to do. You have to find out the lowest cost. That I told you that one-off tells you the lowest cost, because in one-off relevant cost you are not earning any profits, neither you are making any loss. This is known as break-even price. Listen, the last point. This is known as break-even price because neither you are doing any loss. You are covering each and every cost because you are including everything through opportunity. All the losses are incorporated through opportunity cost. All the losses are incorporated through opportunity cost. So you are not having any loss, but there is no markup as well. So this is the lowest cost. It represents a break-even price. No profit, no markup, plus there are no losses because everything is included through opportunity cost. All losses are included through opportunity cost. That is why we call this lowest cost. Guys, this is rule of 5. I hope you all will find it easy. This is how you need to draft the answer. I have already given you the answers as well. You have a slide of answers given here in your handouts. In this answer slide, you have both the answers of Web Company and High Life Company. High Life is given to you here in that answer sheet. So make sure that you use and figure out that through the answer sheet. Now, my friends, just clearly listen. It's very important, the last message I'm giving to you. And once again, a reminder for the WhatsApp group, if you haven't yet sent me any message, Okay. So if you haven't sent me the message, do send me so that you are included in the group. Now, I'll be uploading the guest paper soon. The guest paper of F5 for June 2017. In fact, it's not the guest paper, it's basically high priority topics. It's the high priority topics that I'll be uploading soon so that you can work on that as well. So I'll be telling you the high priority topics for F5. So be with me on that group so that you are well aware of each and every updates. I'll be sharing few important documents as well so that you are used to it. Make sure no irrelevant messages should be on group to make it more effective for everyone. And my friends, the message is clear: be positive in life. If it is not your first attempt and if it is some of you are giving again and again, don't be demotivated. It's your time to prove. The time you have, it's your time. Give your best. Never be disheartened. Success is yours. It's just the time factor that is delaying it. Stay positive. Being positive creates a great message. My friends, my all prayers are with you, all wishes are with you that you succeed in an examination, but be motivated. Never lose hope. Go to your exam centers early before the paper so you are well aware of the environment. Those who are giving F5 for the first time, so this is a unique experience for them because previously they gave the CB papers or the papers in their institutions or in the exam centers, but not like the one that they are appearing right now. So those who are appearing for manual exam, it's the first time they are going into the big examination halls. So do leave early so that you don't miss the opportunity to complete the paper. And my friends, leaving early, sitting in the exam center will make you relaxed. Take a water, just fill out the basic details, and as the time starts, start with the paper. How to approach MCQs, first or long questions. First of all, see your strength. Is your strength MCQs or is your strength is long question? Whatever your strength is, back your strength and start from there. If you like MCQs first, go for MCQs. If you think MCQs are a difficult aspect for you, start with a long question. But my advice is, first start with MCQs. Solve easy MCQs first. Solve easy MCQs first. Just start with MCQs. Section A, 15 MCQs you will be given. Just solve easy MCQs so that you get the easy marks quickly. Just grab the easy marks in your bags first so that your pressure decreases. And then go for the long questions. In between, if you think you do not know anything, don't be worried about it. Just leave it. Go for easy marks. Every time in a paper there are easy marks. Never think that one difficult thing is the only thing. No, the ACCA examiner gives you marks for everything. So go for easy marks and take easy marks first. Always in a paper, on an average, 20-30 marks are difficult. The rest is manageable. So first capture the easy marks, then go for difficult ones. Try to complete the paper on time. It's important that you complete the paper. If you complete the paper, you have high chances of passing in the exam. So complete the paper. And yes, you will only complete if you do mocks. You have been provided with a mock by ACCA. Do solve it. Just time bound yourself. You have 3 hours 15 minutes at your home, at your libraries. Just switch off the cell phones and solve paper in 3 hours 15 minutes. Because 3 hours 15 minutes means that you have done a practice, rehearsal. It's rehearsal which is important. So solve paper 3 hours 15 minutes. Today the mock that is given to you, later on whenever you feel it's convenient, so that before exam you have a proper rehearsal. Take prayers of your parents, which is very important. Prayers of your parents is important for your success. Your parents are a big opportunity for you to succeed. My best, my dear management accountant, thank you very much for bearing me for these 5-day sessions, and I tried my best to transfer best knowledge what I can do. I'll help you out still till your examination. I'm with you till your examination. I won't leave you. So give your best, try your best, and make sure you pass your exam. Do give me your feedbacks, because feedback is important. As I told you today, non-financial indicator is customer feedback. So your satisfaction is my success. And I'll improve it, because once you get the feedback, it gives you the opportunity to improve and improve. Give your feedbacks to ACCA as well. Give your feedbacks to me as well. Personally, on the WhatsApp group, you can WhatsApp me the feedback. Do please, every one of you who is listening me right now, do give me the feedback. How you rated this session? Did you work? Did you like the session or not? Do give feedback to your ACCA as well. Thank you very much for this session. I will be thankful to ACCA for providing this opportunity to me to transfer the knowledge to you people, giving me opportunity to discuss things with you people, and the trust you placed in me. Thank you very much for each and everything for this session. Very much best of luck for your exam, and for all the issues you can contact me anytime you want to. Do make sure you are aware of the guests that I'll be uploading on the WhatsApp group pretty soon. Give me your feedbacks. Thank you very much for the session. Best of luck. Take care. Stay blessed. Bye.